Laurie Itkin. I'm a financial advisor with Coastwise Capital Group. Here I am doing another video on Treasury bonds. 2 years ago, if you had told me I'd be so super excited about Treasury bonds and Treasury bills, I would have laughed in your face. But here we are. I love them. So just disclaimer, I can't give investment advice. I don't even know who's watching, so I don't know you personally, whoever's watching. This video is really informational, educational, teaching you about Treasury bills. They may be right for you. They are certainly right for many of my clients where I manage their assets at Coastwise Capital Group, where I manage their investment and retirement manage their investment and retirement accounts. Treasury bills, why do I love them? Why do they serve a great role in many people's portfolios? Well, because essentially they're as close to risk-free as you can get. Whenever you invest money, you're taking a risk, right? You're taking a risk. If you leave it in your mattress, you're taking a risk that it won't grow and keep up with inflation, so that's a risk too. So right now, interest rates are still so high. I just didn't think they would be high this long, but they are. We're seeing mortgage interest rates continue to be stubbornly high. People really hate it. When you're a borrower, you hate high interest rates. When you're an investor, you love high interest rates, especially for your bond portfolio. So Treasury bills are a form of bonds. They're not a corporate bond. You're basically lending money to the federal government, U.S. federal government. And right now, the yields are high. So this is the Schwab institutional platform that I use when I'm trading in my clients' accounts. And we have a one-year Treasury. So this is a good starting point to look at. If I were to Monday if I had a client who had $100,000 and we're looking to invest it in a really low risk investment, and I bought a Treasury bill or a combination of Treasury bills with a one-year duration, I would get something that would mature about a year from now, not exactly a year from now because they're issued at different dates. And what it's saying is that the yield is 5.116. So you can expect that on an annualized basis, you should be getting about a yield of 5.1%. It could be a combination of the price and the interest paid, but I don't want to get too deep in the weeds on this. You should just expect that about a year from now, you will get, if you invest $100,000, you should be getting over $5,000 back plus your principal. The great news about Treasury bills is you only pay federal income tax on the interest, not state income tax. And in a state like California, where it seems like many of us are paying at least 9.3% on our income, even if you're middle class, not even wealthy, and you're paying 9.3% on some of your income when you reach a certain income level, that's important because CDs that you get at the bank, you are paying state income tax on that interest. A high yield savings account in your bank, you are paying state income tax on interest too. Treasury bills, you don't. You just pay federal. So you're getting a little bit of a tax savings there. Now, what I'm doing for clients is that, look, stocks for the long run. If you are investing for the long run, especially in an IRA, you're not going to touch the money for years. You probably want mostly stock portfolio. But if there is money you're going to need in the next 2 to 3 years to buy a new car, to go on a vacation, to pay college expenses for your child, to save for a down payment on a home, it's foolish to try to figure out I'm going to go into stocks or gold or commodities or something and try to get a return in the next 2 to 3 years because there's risk and the money could go down. So with a Treasury bill, you're going to get paid that interest and you're going to get your principal back as well, unless the federal government collapses, essentially. So that's unlikely to happen. Now, I can ladder these things. It's great. So right now for clients who, we're feeling like they don't want to keep putting more money in stocks, they want some stable stuff. If we buy a 3-month Treasury bill, the yield right now is higher. It's called an inverted yield curve. So on an annualized basis, they'd be getting about 5.4%. Yet if they lock up the money for longer, it's slightly lower interest rate, doing a lot of 6 months and so forth. So, it is a great thing. If you are, if you have an account that's managed by a financial advisor, you might either have a brokerage account or a trust account or an IRA. You may want to talk to them about Treasury bills for part of your portfolio. Obviously, you can invest in these on your own as well as you can with probably nearly any publicly traded security if you have a brokerage account. So right now, while interest rates are high, I'm still really loving Treasury bills. Again, if you are seeking a higher return than this nearly guaranteed return, that's your prerogative. But for a lot of your money, for short-term interest rates being this high, it's a great thing to consider. Again, not personalized investment advice. Some things for you to research on your own or talk to your financial advisor about. If you don't have a financial advisor, happy to talk to you and see if we are a good fit. You can reach me, Laurie Itkin, at theoptionslady.com.